Let's kick off our review with the news that the US inflation data has stirred up volatility across the markets. Watch this video till the end to see if gold has continued to trade sideways and to find out whether the ruble and oil have resumed growth or not. In the early trade, oil prices managed to rise above $76 per barrel again. Statistics on inflation in the US released on Friday contributed to growth in the oil market. The consumer price index reached the highest level since the summer of 1982. This fact has had a positive effect on oil prices as inflation affects different categories of goods, including those that are necessary to ensure oil extraction. Accordingly, high consumer prices lead to higher oil production costs. Against this background, a rise in oil prices seems quite logical and neutral. Thus, if the price consolidates above $76.50 per barrel on the 4-hour chart, the volume of long positions will increase. In this case, the quote will most likely head towards the psychological level of $80 per barrel. The foreign exchange market also benefited from the US inflation data. On Friday, the ruble, like many other currencies, gained value. Although the US inflation rate turned out to be high, it fell short of the market's worst-case scenarios. The market regarded this as a signal that the Fed could postpone policy monetary tightening until next spring. However, trading excitement around the news subsides, while the risk of an interest rate hike persists. Therefore, fears about possible drastic steps by the US regulator may well result in a stronger greenback. For now, the dollar-ruble pair continues to move in unison with the commodity market. As is the case with the oil, the pair is drifting around the pivot point. If the price is able to stay firm below the level of 73.20 rubles per dollar for a few days, the Russian ruble will extend gains. Otherwise, a rebound resulting in the US dollar's rally cannot be ruled out. Compared to the dynamics in the oil and currency markets, gold seems subdued. US inflation data had no effect on the precious metal. Gold prices continued to move around the level of $1,780 per ounce. Apparently, investors no longer view the asset as a hedge. Usually, when inflation rises, traders shift their focus to stable and reliable instruments. But not this time. It appears as though gold is losing out to the dollar in the battle for safe haven dominance. Thus, gold futures have been moving sideways for the second week in a row. Gold is currently trading at $1,784. In this situation, the best tactic is to trade with a view to breaking through one or another boundary of the range. If the price consolidates above $1,800, gold will most likely advance. If the price fixes below the level of $1,760 per troy ounce, its further trend will be bearish. And this trading week is going to be interesting. A number of central banks will hold meetings soon, which means that we will receive clear trading signals. Follow the news, build your strategy, and make your profit. See you back soon.